Hello viewers, welcome to Ekam Academy. Today we are going to discuss about open market operations. So we'll hear this particular term in the economic context very often. So we'll understand what is this open market operations, what type of operations will be conducted as part of this measure, and who is going to conduct, what is the main intention and purpose behind, we'll understand in this video. So first, we are seeing the context is recently RBI has conducted or has announced a plan to infuse almost 1.9 lakh rupees into the banking system with the help of open market operations. So what is this open market operations, we'll understand. But before that, we have an important announcement regarding those who are preparing for UPSC Prelims 2025. And if you're unsure about your revision, there is a very good opportunity at Ekam Academy, where from 17th March, intensive revision program for Prelims 2025 is about to start. In this program, entire classes will be dealt by subject experts. Those persons will be teaching you by integrating the static and current affairs and along with analyzing the previous year papers, so that you will have the right approach to deal with the paper in the upcoming prelims examination. So for any detailed schedule regarding the program, you can scan this QR code, and this program is available at a very affordable rate of 2,999 only. So if you enroll in this program, you also have another benefit in the form of availing the test series for at the rate of just 999 only. So if any one of you have any further details, you can contact us on this number, right? So we'll understand what is the concept of open market operations. So when there is excess money supply, RBI has to take the excess supply or suck out the excess liquidity, so that inflation and all these trends will be reversed. And when there is no liquidity in the market, it has to infuse some liquidity. So these will be done through series of monetary policy measures. In that part of monetary policy measures, we do have qualitative and quantitative measures. As part of the quantitative measure, we have one measure is open market operations. Government securities will be bought or sold by RBI, mainly to infuse or to suck out liquidity from the market. So we'll understand. So what generally happens? So this is a Reserve Bank of India. When there is no proper liquidity, they'll buy the government security. When they buy government security, what happens? They're infusing the money into the banking system. With that, what happens? Loans will become cheaper and more money will be available with the public. Right? That means it is going to boost economic growth in that situation where there is no liquidity in the market. But when there is excess liquidity, at that point of time, RBI will be selling the government securities. When it sells the government securities, it is going to suck out the money. That means banks will be having limited money with them. That means borrowings and loans will become costly. At the same time, inflation will be in control. That means when you have less money, you will try to buy less. So that means you are trying to bring the inflation under control. So this is a simple concept of open market operation, but we'll also understand in a simplified manner. So open market operations are of two types, either buying or selling. So this operation is being done by RBI. So what are going to be bought and sold? It is the government securities. Government securities are being bought either from the banks or they're being sold to the banks. So when there is no liquidity, RBI will be resorting to buying of government securities. No liquidity means they'll infuse liquidity with the help of this buying. So when there is infusing of money, more money is available in the market. That means increased money supply will be there, so that economic growth will be boosted. When they wanted to infuse or when they wanted to suck out all the liquidity, they'll be selling the government securities. That means they'll ensure that sucking of excess money supply will happen or excess liquidity will happen. So because of this, there will be less money available with public, so inflation will be under control. So this is a simple logic of open market operation. Apart from the open market operations through the repo rate, reverse repo rate and many other things, through these measures, RBI is trying to ensure that inflation is under the policy range of 2 to 6% range. At the same time, they are trying to ensure that economic growth is also achieved with the help of price stability. Now let us see the practice question in this regard. What is the primary objective of RBI conducting open market operations? 4 options are listed. Try to understand and identify the right one and let me know in the comment section. Then today we have discussed about an important concept in economy, that is open market operations. Who conducts this open market operations? What is the intention behind, and what will be done when there is excess liquidity and when there is no money in the economy or market system? So we have understood this video. I think if you found this useful, let me know in the comment section. Thanks for watching. All the very best.